Welcome back to Mid-Cap Radar. Well, the market continues to scale new highs, especially when you're looking at some of the large-cap names. Reliance Industries near the day's highest point. Even a name like ICICI Bank doing very well in the session. And the other stock, one especially large from the capital goods space, is L&T near the day's high as well. But moving on, Tata Steel reported a good set of Q2 numbers, led by the India business as well as the European business that came in line. In fact, my colleague Nigel D'Souza spoke to TV Narendran, CEO and MD of Tata Steel, and began by asking about the demand and the impact of the GST rate cuts.
We've had a decent quarter. The domestic demand has been strong. If you really look at it on a year-on-year basis, the steel consumption has grown by about 10 to 12% per year, which is strong. The challenge has always been the prices in the market, which have not been great. There's pressure because of international prices, export opportunities not existing. There's pressure because there's a lot of supply coming on stream, including ours. Hence, there have been generally margin pressures in the market. But overall demand has been strong. We've not seen a GST impact in that sense of the term because, firstly, the steel industry is not so directly impacted. It's more our customers who are impacted. But that did not have a material impact on our offtake.
All right, that brings me to the next question with regard to pricing. We have been talking about this for a while. Indian steel, if you compare it with imported steel, is at a big discount. So there are hopes, for a while that there's going to be a price increase. Yeah. The monsoon got over a month or so ago, and yet we haven't heard about that price increase. Yeah. What are we waiting for? Is supply too much? Because this supply is likely to continue. You, as well as some of your peers, will continue producing more. And if demand is strong enough, then we should ideally see a price increase. Or do you think prices will continue to stay at current levels?
I think, Nigel, the challenge is, like I said, the international markets are not really attractive because of the fact that China is still selling 10 million tons of steel a month. May not be in India, but they're selling it all over the place at prices at which they themselves don't make money, right? So as a consequence, the export markets are no longer an attractive option. Whereas at one stage, India used to export 1.5 million tons a month. So that volume is coming into the domestic market because hardly any exports is going out of India. And that's adding to the pressure, particularly in months like September, October, when anyway the offtake is a bit low because of monsoons, because of workers going back for festivals and all that. So inventory builds up. There's pressure then on the steel producers to drop prices a bit, and which is what has been happening over the last 2-3 months. So we are obviously hoping and expecting that prices will go up in the second half of the year because that's normally a better part of the year for steel consumption. The festivals would be behind us, elections would be behind us.
Let's talk about the cost side then. Cost of coking coal cost, how much lower was it in the second quarter? If you compare it with the first quarter, you could break it up geography-wise as well. And for quarter three, how is it likely to look?
So I think we had guided that coking coal prices will be about $10 lower from a consumption point of view in Q2 compared to Q3. And it was pretty much as per guidance. It's relevant only for Netherlands and India because we've closed the coking plants in the UK. And for the next quarter, again, Netherlands will see another $5 to $7 drop. India will see a $5 to $7 increase because Netherlands typically holds more stock because they have, their supply chain is a bit longer.
Okay, let's talk about pricing then in the European markets. There have been those restrictions that have been put in and quotas have been cut as well, which in turn should reflect in positive pricing. So tell us in Europe, how is pricing shaping up? And also, in the coming months, CBAM is likely to be implemented in the European markets. That's what could give a further fillip. So how do you see pricing environment?
So if you look at Europe, we are positive on the pricing. May not be for this quarter, but certainly from January, because the announcements that the European EU has made on quotas is welcome. Basically, they're going to cut the quotas by 50% and have a 50% duty on any volumes which come in excess of the quotas. So that's positive, and I think steel prices have started going up. It's a good time for us to also negotiate our annual contracts because this is the time when we negotiate annual contracts for next year. So I'm positive about steel prices in Europe from January. In this quarter, we are likely to see a drop simply because we will see the impact of the US trade issues. We did manage to get some of our volumes through in the last 2 quarters, but now we are impacted by the duties. Of course, our customers are bearing some of the costs in the US, but some of the costs are coming back to us, and some of the volumes that we've lost to the US being diverted to other markets are also not helping realization. So our guidance on prices for Q3 compared to Q2 in Europe, Netherlands particularly, is about 30 euros lower in Q3 compared to Q2. In India, it's about 1,500 rupees lower for Q3 over Q2. In UK, we expect it to be flat, though UK has a lot of challenges because UK doesn't have the protection that EU has.
Okay, let's focus on profitability then. India EBITDA per ton was looking quite good, given that pricing will be soft, but you'll have operating leverage, that will play out. Though input cost at India as well will be relatively high, as you told us, because, the cost of coking coal. So for India, Netherlands, as well as UK, how do you see things panning out in terms of an EBITDA per ton directionally? And when does UK turn into the black? Q4?
So as far as margins are concerned, we will see some margin compression in India because of lower prices and higher coking coal costs. But we will also have more volumes in India compared to Q2. We expect Q3 to have about 500,000 tons more sales than in Q2 in India. So that's a positive for India. But there will be margin compression in India for Q3 compared to Q2. In terms of Netherlands, again, there will be some margin compression, but not as much because we are also getting some benefits on electricity and other costs. UK also, we expect things to be a bit flat. But UK, the larger issue is the UK government has still not adjusted the quotas like EU has done. So as a consequence, for many of the products that we produce in the UK, the quotas are greater than the demand for that product in the UK, and that's causing us a problem. We're talking to the government to see what is the help we can get there.
Yeah.
So that's why UK is still in the red. Q4, we will not be in the black. We hope to keep reducing the losses in the UK. If you saw this quarter, the losses in UK were half of what it was last year, the same quarter. And last year, the same quarter, the prices were much better.
Okay.
So the prices have dropped more than we had thought. Our actions have helped to make sure that the losses are less,
Okay.
but we are not yet in the black, and we hope to get in the black in the next few quarters.
Next few quarters. So in the first half of FY27 should possibly be in the black?
We need some support from the government on some of the actions that we've requested, and if so, then we should be in the positive.
All right. And debt went up a little bit. That's because of working capital. That will align itself?
Yeah. So it's in some sense what was part of our plan. We had planned to bring down the debt by the end of the year. Middle of the year, we had expected it to go up because a lot of the Kalinganagar payments are being made. The facilities have been commissioned. The ramp up is still happening. So the benefits that should accrue to us are still accruing. So I think it's temporary. We think that debt is largely under control in terms of, if you look at the net debt to EBITDA, we are below 3. And, we will keep managing it very tightly going forward.
All right, that's the word coming in from Tata Steel. The stock has recovered from the lows of the day as well. We'll slip into a short break now. When we come back, we'll get you more on the markets and stock-specific action on the other side. Stay tuned for that.